CG Hospitality Holdings manages or runs more than 100 hospitality properties world over. Now, they've just made their latest entrance into East Africa with the Fairmount properties in Kenya. We caught up in this CNBC Africa special with the managing director of CJ Corp Global, who also doubles as the CEO of CJ Hospitality Holdings, Rahul Chaudray. Now, to be part of this conversation, tweet us at CNBC Africa, or you could tag me directly at The Real Kwizera. Thank you for making the time, Rahul. There, interesting times for the hospitality industry. Interesting in not so positive way, and that's I want that to lead our conversation today, because you have carried out some form of expansion at a time when the industry seems to be bleeding. Actually, looking at the numbers coming in today, yesterday Kenya's Cabinet Secretary for Tourism said 72% revenues were down by a whooping 72% in the tourism sector in the country. But you've decided to expand into East Africa's biggest market, which is Kenya, despite those challenges. What's the reasoning behind this expansion drive?
First of all, Arnold, I'd like to thank you and CNBC Africa for giving me this opportunity to share some of my views on our hospitality footprint across the world, as well as in Africa specifically. So thank you. Now, just to turn towards your question, we have always looked at East Africa as a very key location for growth. And we've been in this market, in the East African market, I would say, for almost 8 to 9 years. And we started our first footing in Kigali. It was quite a important investment for us. Unfortunately, that didn't go as planned, but you're right. We made this new investment in Kenya through the acquisition of the Fairmont, the Norfolk in Nairobi, and Fairmont Safari Club in Masai Mara. Many people looked at us and said that we're not sure whether you made this investment in the right time or the wrong time. But we were always of the view that East Africa in itself is an emerging market. And in East Africa itself, Kenya is the gateway to East Africa itself. And that's a market that has seen its ups and downs, but that market always has a strong driver in terms of tourism and in terms of growth. So we look at our acquisition as a very timely acquisition because of several factors. That, number one, we are obviously buying an iconic historical asset, which is known all over the world. Secondly, the location of the asset in itself and the brand in itself. We saw a huge potential there because, as you mentioned, that right now Kenya unfortunately is going through quite a downturn because of the COVID situation. But we see a huge amount of opportunity there itself, whereby relooking at the current business models, relooking at the current cost structures, relooking at the opportunities in the whole land bank in itself that is prevalent in the Fairmont, the Norfolk itself. So for us, we think that Corona has been an opportunity in many ways. And we, as a group and a hospitality all over the world, we have looked at always assets from a distressed point of view. And this was an asset at a distressed position. And we hope to take this asset to its glory.
Very optimistic take there. But if I'm to look at this glass as half empty, this looks high risk. And going by previous investments into Rwanda, and now this in Kenya at this particular time, is it wrong to look at it as really a high risk investment at this particular juncture?
I don't think so, because as I mentioned, Arnold, that if you see our history of CG Hospitality since the past 20 years, fortunately or unfortunately, I would say that we've always made investments in locations and markets that have just actually come out of war or actually come out of some crisis or are in a crisis situation in itself. And that has worked really well for us. And that starts from our first investment in, just to give you an example, in Sri Lanka and Maldives when there was a huge uprising in Sri Lanka. And we made those key investments. And now if you look at those investments, those are some of the most valuable assets in the Taj portfolio today. And when we look at the investments that we made in Kenya as well in March, we believe that this is going to open new doors, new opportunities, because there is a huge potential in this investment in itself. And I will always tell you that respectfully, we always look at the glass always half full. We never look at it as half empty, because in every investment, there's an opportunity and upside. We look at that upside for the long run, which we have to capitalize on to make that investment viable.
What drives those investment strategies? You talk about Sri Lanka, you talk about Nepal, Kenya now. What's the mindset behind that kind of investment drive?
Okay, first, I would say that's from a strategy, global growth strategy point of view, we obviously have articulated or outlined a few geographies that we want to be in. And we have moved on according to that strategy in itself. And we have covered literally all the way from New York to China in 12 different countries. East Africa was always a key strategic location for us. We always look at frontier markets, we look at emerging markets, and Kenya was that. Secondly is the entry price that we look at. We would never make an investment in an asset that is at a maturity or at a high level. We'll always look at an asset which is at a distress level in terms of its operations, distress level in terms of the revenue, let's say optimization, and we run our numbers on that basis. And through the rehabilitation, I would say from the word perspective, rehabilitation of this asset and effective asset management and bringing about the right change in the asset, we run our numbers to see that there is the potential to take this asset and get much higher returns than what it is getting at the moment. So I hope this answers your question in terms of what drives us. Apart from the fact that it's the passion for hospitality.
Would I be wrong to think it's a combination of some value, growth, and some momentum investment, a cocktail mixture of the three?
Absolutely. And the last point I mentioned is the most important factor, which is your hunger for growth and passion for hospitality to take our hospitality business in different continents and different countries around the world.
Rahul, talking about passion, one thing that this year has taken away from so many people is the passion to invest in businesses, and that's as a result of the COVID-19 pandemic. What has been the impact of that on CG's hospitality business globally?
Well, Arnold, like you mentioned before, I think the entire hospitality business globally has taken a huge hit. But let's also keep in mind that the hospitality and tourism fraternity is a very resilient one. We have gone through such challenges, country-wise as well, in terms of different issues that may have happened, different crises that may have happened. But this is catastrophe just to paraphrase that, in a global scale. So naturally, hospitality has been hit all over. But like I mentioned before in the first question I answered, Arnold, that it depends on every group how they look at a catastrophe or a crisis. And I mentioned to you that while we have definitely been hit all over the world, but we have looked at this as an opportunity for us. It lets us relook at things that we would have never looked at in the normal course of business, such as your cost structures, such as your revenue generation areas. You start thinking outside the box. Things that you wouldn't do. I'll give you an example. Just in my regular reviews that I have literally on a weekly or a fortnightly basis now, we used to look at the revenue budgets all the time. Now I've literally given up looking at revenue budgets. I'm now only purely looking at the cost budgets, because cost is the only factor that is within your control to a great extent. And if you are able to control the cost now and keep those costs even during a time when there is a little bit light at the end of the tunnel and revenues come in, I can assure you that you will emerge stronger, and you will be able to ride the storm, and you will be able to make sure that the returns are much, much better in the long run. So while it has been, it has taken a huge toll on the entire hospitality business, but I can only assure you that the business will, everyone is going to come out much stronger and much more resilient.
Look, let's take a few steps back and then let's look forward, right? 2017, you had set up a fund of about $800 million US, which you were trying to use to double your investment portfolio across the globe. Where do you stand now in regards to that? And what does the future hold in terms of future costing, as you're not looking past the 1.5 billion US revenue numbers that you are getting from the CJ Hospitality?
Well, Arnold, you know, when we set out on a journey to create funds in different regions, I would say we were setting up a fund in Southeast Asia. We were setting up a fund in the Indian subcontinent, in Middle East and Africa, and in Europe. And we obviously engaged with many different partners, GPs as well as LPs. We also engaged with operators. And a fund is a business that doesn't happen overnight. It takes a lot of time because it requires alignment from various different stakeholders. Fortunately, I would say that, unfortunately, it took a little time to get that through in terms of actually moving forward with the fund. But fortunately, I think God saved us from the perspective that COVID hit us, which is why we took a little bit of a step back in terms of creating these funds or moving forward with these funds to pursue our growth strategy altogether. But you can imagine that if we had embarked on this fund and we had invested in key assets around the world, we would be liable towards our shareholders. And as you mentioned yourself about the toll it has taken in the hospitality fraternity, I don't think we would have been able to survive as a fund in terms of return to any shareholder whatsoever. So I'm happy in a way that has taken a little bit of time. Having said that, we are not going to stop pursuing that strategy in the future. Of course, we will have to re-engineer that strategy and be a little bit more picky and choosy. But having still said that, our strategy as CG Hospitality Holdings Global is still going to continue to look at distressed assets all over the world from a single unit perspective, meaning we are still looking at assets in East Africa. We are still looking at assets in West Africa. We are looking at assets in Europe, Turkey. We are looking at assets in India. So the growth does not stop there in itself. I mean, we as CG Hospitality are fully committed to taking our flag all over the world, and we continue doing that. And as just lastly to mention to that point in itself, we look at this Corona again as an opportunity where there are going to be tons of assets that are going to be available in distress, more so in Q1 and Q2 of next year than now. And that's when we will have to be ready to make sure that we capitalize with the dry gunpowder at that point in time.
Already looking into the future and going by that mantra, not putting pandemic to waste. Look, Rahul, sector performance, right? Let's just look at a global sector performance. Tourism is expected to take a dip for the next 3 years minimum or on a minimum basis. But as you as CG, as Rahul, Managing Director and CEO of CG Hospitality, what's your estimation of when the sector could bounce back? And as you answer that, what could be what could be done to enable smaller players in the industry stay afloat?
To answer your first question, Arnold, in terms of when I foresee the industry is going to bounce back, I think you mean when you say bounce back, you mean pre-COVID. I would think that it would take another year or two. I mean, it depends on which part of the world you are in, because some locations or some continents are going to revive much faster because of the sheer fact that, for example, I'll give you an example that, let's say, American tourism in itself is a huge domestic market itself, and it is a huge feeder market for the rest of the world. Now, as you know about the vaccines and the news that we hear every single day about the emergence of a vaccine, it is still to be seen. But we know that the big giants, such as America, will probably gain to have access to this faster than anyone else. And the rest of the emerging and frontier markets won't. So I foresee, that's why I said that my prediction would be not less than 1 year or 2 years, different markets in a different situation in itself. And second question, in terms of what the businesses can do in itself, as I mentioned in my previous question, I think the most important aspect is going to be how you stay afloat, and the way to do that would be from cost control, would be from looking at the business, not purely from a room factory. I mean, I'll give you an example. We have a business hotel in the center of Kathmandu in Nepal, Vivanta, which is another brand of IHCL. And it was supposed to be running like a room factory with minimum F&B revenues. But now, because of the COVID, what we've had to do is that we've had to fast track the F&B offerings in the hotel. And now 90% of our revenues every single month is coming from F&B. Now, if we had not looked outside the box, we had not reimagined our business model, I don't think we would have been able to generate the revenues that we are. But you have to be flexible. You have to be able to adhere to and adapt to the current crisis situation to be able to stay strong and be in the business. And thirdly, actually, it's very important that you work with the other stakeholders in the business. That is your vendors, that is your customers, that is your authorities, that is your bankers. All of these are important aspects in your business, and keep in mind that they all are suffering. And in this business, no one alone can survive. Everyone has to be together to survive in this business. So everyone is in this together. And you have to take each other into confidence, work together as one party to share the risks, share their opportunities, so that you can jointly in the future be able to come up with a business model that works for all. And compromises need to be made, even from the operator side. But everyone is fortunately has accepted the fact that this is something that is affecting everyone, from literally like a chaiwala in India. You call someone who's making tea on a roadside shop to a multi-billion-dollar company. So you have to take all of these into account. But the principles and fundamentals are the same for the survival of every single business.
Look, Rahul, the estimations are that close to 40 to 50% of jobs in the industry, and industry here I'm talking about hospitality, are going to be lost during this turbulent time. And it even goes further to say bouncing back of those jobs will take at most 20%, at most, will bounce back 5 years to 8 years down the road. Now, could more have been done, in your view, to save some of these jobs? And if yes, what could have been done? And if not, what can be done?
Well, Arnold, I'd like to mention here very proudly that CG Hospitality has not let go of even one employee from our side. what we have done is that in every single operation, we've tried to retain our staff. Yes, we have done certain compromises in terms of the salary reductions and in terms of keeping the staff on a rotation basis so that they at least have some earning to keep their household in order in itself. And I think that pretty much answers the question in terms of what can be done or what should be done. But let's also keep in mind that different hospitality players and owners and developers and operators are in a different situation. Some are more under pressure from the banks and institutions. Some are more under pressure due to the local situation that they are going through. But it's a question of, like I said, working with the stakeholders, working with your employees, and making them understand that the situation is not permanent and this situation is going to improve. Obviously, like I mentioned, that I think the employees who are stakeholders of the business in itself have been quite understanding when it comes to CG hospitality all over the world, and everyone is working together to stay afloat because, like I said, we are all in this together. Everyone cannot be high-handed by wanting what they used to get pre-COVID. They all have to look at this from a long-term perspective, and that's what they have to do. And from a stakeholder perspective, I think the stakeholders have to really work hand in glove with the hospitality, let's say, organizations, with the tourism ministries, tourism federations, in order to seek as much relief from them, seek as much assistance from them. Same thing from the banks. You have to work closely with the banks to ask them for as much restructuring of your loans so that you can pay for your operating costs, which include the payroll of your employees as well as your operations. And in that aspect in itself, I mean, there are, yes, from our hospitality perspective, there are a few businesses, I must say, where we have had to close down some of the units in itself. And that was because keeping those, we realized from a business point of view, it was perhaps not the right decision to move forward due to the huge and humongous cost itself. Thereby, we may have had to do certain compromises and discussions with the unions as well as with the staff to see what works for both parties in the long run, as well as the sustainability of the business.
Let's talk about you as a leader. No school could have ever gotten you ready for this pandemic. I don't think there's any school that teaches how to manage a business during a pandemic. What was your approach, especially initially when the lockdowns were happening, the travel restrictions started to happen, the cancellations and bookings started to happen? What was your initial reaction?
Like anyone's reaction, that it would not last too long. And that's what you look at when any global crisis happens. You always look at it that this is just a phase, and it'll probably go by, and we will be able to put in necessary short-term measures. But I think we as a group took a long-term view. And obviously, as soon as the crisis hit, everyone was obviously glued to the newspapers, glued to the media, and different channels of information. And right at the beginning itself, I think we engaged in such discussions with key players, government authorities, financial institutions, the financial markets, and we realized that there is a possibility that this is going to stay on for a long time. So while we were preparing for the short run, we were definitely planning for the long run in itself. And I think whether you call it an intuition, you may call it a gut feel, an entrepreneur's instinct, we felt that this is something that we need to prepare for the long run. Yes, if a solution comes by in the short run, everyone wins. But if the solution does not come for the long run, we have to brace ourselves to be still surviving and breathing, no matter what time that comes. And that's how we have structured our businesses all over the world on this basis.
Let's, because we are really running out of time here, but let's look at your investments into East Africa's business capital, Nairobi, or Kenya to be specific, Fairmount Properties. What does this show in terms of intent in your African strategy?
Like I said, Arnold, that when we stepped into East Africa almost 8 years back, we had developed a strategy whereby we had outlined 5 different countries: Rwanda, Kenya, Uganda, Tanzania, and Bujumbura. These were the places where we wanted to be, and we started off with just a little bit on the history lane. We started off with our investment in Rwanda itself, in one of the key locations there. And unfortunately, we ran into some problems with some local partners, I would say. So very important to find the right partnership when you're entering a new frontier and a new market. But having said that, I think our weight and our experience and our learning helped us. And I think our investment in East Africa, being a Nepalese bred and born company, and coming and investing in a country like Kenya in East Africa, which is the gateway to East Africa itself, I think will give a lot of confidence to investors all over the world that there is an investor that has come in here and invested in East Africa and Kenya specifically in the most difficult times. So it shows their confidence in the market. It shows their confidence in the region. And I think it'll bring about, at least if it doesn't bring about investment immediately or bring about investors immediately into Kenya and East Africa, I can assure you that it'll make them think why they are here. And we are not going to stop just in Kenya itself. We want to grow in other East African markets. In fact, just in Kenya itself, we are already looking at a few locations. We believe in the market. Yes, it does have its own ups and downs, but keep in mind that despite of its ups and downs, many of the markets in East Africa are the first ones to go into a problem and the first ones to come out of the problem in itself. So the market is there. There is a huge opportunity there, and we would like to capitalize that in the long run.
Best of luck with that entry into Kenya and the current expansion drives. Hope we can have more of these conversations very soon. A very optimistic conversation there with Rahul Chaudray, Managing Director of CG Corp Global and CEO of CG Hospitality Holdings. Now, to be part of this conversation, tweet us at CNBC Africa, or you could tag me directly at The Real Kwizera. Have a good day.